Welcome to Markets Now. I'm Michelle Rourke with Brian Splitt of agmarket.net, and we're doing some post-WASDE report analysis. Not a lot to talk about here, Brian, but a few nuggets. Let's talk about corn. First of all, we did see lower old crop and new crop ending stocks by 50 million bushels, so that was at least a little positive, wasn't it?
Yes, and actually the USDA just released the same exact numbers for corn that agmarket.net had provided pre-report. We were looking for the 50 million bushel reduction in old crop stocks, again, due to the export pace. That is the exact drop that we got to 1.365 billion bushels. That therein decreases the new crop carryout estimate by the same 50 million bushels just due to, again, reduction in carry-in. The USDA is not going to change yield on this report. They've only done it 3 times in the last 20, and those are reductions because of extreme weather in May. So that was really generally off the table. And they're not going to change new crop corn demand either. They just gave us the first new crop balance sheet a month ago. So there's nothing that's going to happen in 1 month to make them revise that. So this was really just an old crop demand revision primarily here for corn.
Right, which carried through into the new crop as far as the carry in. So now we're looking at a 1.365 billion bushel old crop ending stocks number. We certainly don't feel like we're trading that low with the July contract or the SEP.
No, it doesn't feel like we're trading that type of a carryout from a flat price perspective or from a spread perspective. There were times here over the last 6+ months that we've had July corn trading as much as 40-cent inverse over December. So now they're back to about even money. Maybe July's a couple cents under December. But that type of a 1.3+ type of a carryout in previous years with stocks to use at similar levels has seen July trading substantially higher than December at this time of year. So one has to wonder if the USDA isn't going to find bushels in the June stocks report coming up, because I don't think the flat price and spreads are trading like the carryout is what they're telling us. And if that's the case, then maybe they just reduced yield too much in January and overdid it to the downside. So we'll find out here later in the month if that's the case. But I agree with you on that one, Michelle.
World corn carryover down 2.6 million metric tons, but not enough to really make a big dent or move the market, obviously.
No, and I think that might get revised higher here. I'm surprised the USDA actually didn't increase the size of the safrinha corn crop. That's been a very common discussion point recently from a lot of the private analyst estimates out there in South America directly is, hey, that crop might be 132, 134. It seems to have gotten bigger over the last couple months. So I wish the USDA would have just gotten that out of the way, made that revision so we can move on, because that's maybe something that the trade's going to think is still coming down the road, is an increase in global stocks because of an increase in that safrinha corn crop in Brazil.
Yeah. Why do you think they left it at 130 million metric tons?
I don't know. I mean, they've had the Brazilian soybean crop at 169 from their first estimate and haven't changed it at all. So, apparently they nailed it from the get-go. A lot of times USDA is slow to move on the South American crop size, slower than what the market thinks they should. That was a theme last year as well. So maybe they aren't wanting to shake things up here too much before we get into the weather market. But I think the evidence was there that they should have made that revision higher. So I'm not sure why they didn't.
Brian, do you feel like the reason maybe the July D's corn spreads unwound like they did was partially because of this big safrinha corn crop that was anticipated to be coming at the market and competing with us?
Without a doubt, absolutely. I think the market was holding some premium here in July versus the new crop, and over the last 2 months, as the perceived size of the safrinha crop has increased, we've seen, number one, Brazil's domestic values really drop precipitously, and as that was happening, the value of July corn versus September and December corn dropped precipitously. So I think that was a 1-to-1 relationship there with the July CEP and July D spreads and the decline in Brazilian premiums.
Yeah, and we didn't see any revisions in soybeans either on a global or a domestic basis, did we?
No, we didn't. AgMarket.net's estimate pre-report was a very small 5 million bushel revision lower on old crop stocks, thereby reducing new crop stocks by the same. But they didn't do that. They left old and new crop unchanged from May, so nothing there. And they left the bean world scenario the same. And I really wasn't looking for any bean revision on this report. Bean harvest has been done for a while. It's the corn, the safrinha corn crop is the one that the market's focused on right now. So again, wasn't really looking for any world bean revision, was looking more for the corn revision, and that just didn't come to fruition.
Wheat market did get a little bit of positive news with domestic ending stocks being lowered by what, 25 million bushels?
Right, and that was by way of exports, and I'm glad the USDA acknowledged that we do have a very strong export pace for wheat for the new crop. We've got a very strong start to new crop sales, I think best in about 12 years or so. I like the fact that the USDA did increase the exports. The concern would be maybe in the next month or two that export revision higher might be met with a increase in production, primarily on the hard red crop because of the way that the conditions have improved. It seems like we've got a large crop coming, but I would venture to say that if they do increase the size of the production, they may also increase exports again down the road to help offset part of that. So I think the wheat program right now is one of the the shining points of our export program.
Absolutely. World wheat ending stocks lowered by 3 million metric tons. Do you think that's going to go down in the future? Because we continue to hear about emerging problems in Canada, Russia, China, lots of areas.
Right. I mean, you've got an awful lot of very dry weather in Canada. We've talked about concerns about Black Sea wheat. We know that China has areas that are flooding, and then we've got other areas that are in drought conditions right now. So it does seem like there's some things bubbling globally with wheat production. And if that continues to be the case, we'll likely see, number one, continue to increase in the export numbers for U.S. wheat, and we'll continue to see revisions lower in the world wheat stocks. And so hopefully these things kind of start to come simultaneously with making some harvest lows in wheat, and we can get some upward mobility. I would think it would be very helpful if the wheat market has already bottomed and could continue to see some gains moving forward, especially in a period of time where we're looking for the corn market to provide some upward mobility to get some marketing opportunities done.
We certainly are, but the funds have been pretty relentless sellers across the grain complex. And let's talk about the next thing that the market's going to be trading: weather, tariff news, those sorts of things, right?
Right. So, I mean, this tariff news is hard to stay on top of. There's always a lot going on. There's negotiations. What is the policy that's going to fall into place? So it's headline to headline there. And weather is model to model. And so yesterday we did see the reduction in some rainfall a little bit further out. So it seems like the next 7 days, all the models agree that we're going to see rain come. After that week, we did see the models go a little bit drier in the Euro, took some rain out of Iowa. We're going to see the heat ramp up a little bit. And I think a lot of the crop nationwide could use some heat, at least initially. We're lacking on some growing degree units in a lot of areas. We've had a very mild spring, very cool temperatures. So I think the crop overall could use some heat, but you get that heat to stick around too long, and then we start to see if the forecast of rain doesn't come to fruition as we start getting into July, then we've got a little bit of a market that could bubble up here. And it seems to me like there's kind of two different types of patterns in corn. There's a pattern that we've kind of grown accustomed to over the last couple of years where we end up making some lows in winter and we rally into spring, making a spring high, and then falling from there into fall, making our lows. Then there's years like this year, which might be similar to 2015, 2017, 2020, where the market makes a winter high, breaks into June, and then we get a very short-lived but sharp rally. So I'm still optimistic that that might be coming around the corner here, but I would very much urge producers that if you get a 2 to 3 week rally that comes very quickly and is very aggressive, that may likely be your marketing opportunity for the next 6 to 8 months in that short period of time. So you have to stay pretty vigilant. And that might come in the heels of maybe some anticipation of what the quarterly stocks and the acreage numbers might say at the end of the month as well, which will be another big piece. So, we alluded to the idea that the market's not trading like a 1.365 type of a carryout on old crop. Will that June quarterly stock report tell us why that is?
All right, thanks so much. Brian Split with agmarket.net. That is Markets Now.